With yield leaning more into the dollar than any other currency right now, let's look at what the market is saying regarding all the majors of the market, and then we'll take a look at the chart and determine what directions we're going to go next when it comes to the trading market. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. So over here on the dashboard today, we have the US dollar card being the best buy in the market. Now, it has a sum product of 62%, or sorry, 64.2%, and a very small variance. The yield is more towards the dollar than the Canadian dollar, not like heavily more, but good more. We have the high impact data and the 14 days release of saying that the dollar has been better than the card. The recent 14 days EMA cross, the 50 and 20 SMA cross, is at the 40% mark, which is going towards the bullish perspective, with the non-commercial traders going strong in this market and the retail traders going strong, meaning I should be going against them. So my retail stance against the market is at 42%. This is a personal retail stance. So let's take a look at that market and see if we have any opportunities. First and foremost, on the monthly, I can see that the monthly is on the run up to the upside, and what we have on the weekly is price is coming into a weekly supply zone right here. So right here we have a weekly supply zone standing just before price right now, and it's something that we should be careful of. Right, we should be careful of, because price could go in there and then capitulate even lower against us, right? Nevertheless, let's go on to the daily, and what you'd see here on the daily, this is why my daily direction is reading bearish, is when you see the 20 and 50 moving SMA, simple moving averages, it is still quite in a bearish stance over here. So with that in mind, what I'd say is this. Now, price recently broke through this supply zone, and personally, I would love to use a break and retest in this market, depending on what the fundamental is saying at that point in time. But right now, I can see price is mitigating a weekly supply zone. And let's see if we have like weekly demand zones, supply zones here. Sorry, daily supply zones here. Do we have daily? Yeah, we have a daily supply zone a bit far off. And we have a retest, a possible retest daily zone here. So this is my new retest zone for the daily. I would trade this market if I see price come down here and move to the upside. If I see price finds its way down here and starts to make that change of character, then I will personally trade markets towards the upside. This is how I see the market right now. Moving on, I have the US dollar Japanese yen. Now, you all already know how I feel about this market. This is not financial advice again. I would like to state it out. With the US dollar Japanese yen, the market is quite bullish. We have the variance not so bad. Some product is also good. Now, the yield is completely in the dollar hands, like very heavily in the dollar hands. The data, the economic data is good, leaning more in towards the dollar as the day goes by in the recent 14 days. The technical direction, however, is opposing the situation, and the non-commercial traders are going long. So on the chart, I want to show you guys something. I'm just going to head straight to the monthly time frame. Now, what you will observe is this. You see this channel I have right here. This is a channel I call my channel. I call it the US dollar Japanese yen channel of death. Why do I call it the channel of death? Not like somebody died anyway, for real, but it's more like if you zoom into the zone, you realize that this is a monthly. Take note, this is a monthly time frame, and each time price has traded into the zone, it has pushed away from it. You can just see it right here. I don't even have to like make it obvious, but you can see it. Price came back into the zone and it has pushed away even strong, and now price is in this zone again. So we're at a position where price could still push lower. That is one stance price could do, or price could find its way and then, you know, move ahead and go upwards. This is a possibility of what price can do. And personally, looking at this chart, with price being within this channel of death, I personally don't even want to trade this market. I've been saying this for quite some time right now. I think for about some weeks now. But this is like, you can see it's been 3 months of playing within this zone, and price has not made any clear move, you know, out of that zone. Still dancing around the area. Now, moving on to the daily, which is where I tend to get my major buyers from. What I see here is, you can see, like I said, the market is technically bearish in my opinion. Like the actual technical direction is still bearish until this SMA crosses to the upside. It is bearish in my opinion. But what I see here personally is I see a supply zone standing right here, just above where price is staying right now. Matter of fact, price is now within the daily supply zone, and it's a very strong one. As you can see, we have for ourselves another like very strong channel right here, which price tend to have gone above it and capitulated hard, and now price is within that same channel again, and it's struggling to go through it. So in my opinion, I don't even want to trade in this market. The next thing I have is the US dollar against the Swiss franc, and this is also a slightly bullish market with the yield completely in the dollar's favor. The economic data is looking somewhat neutral. Why do I say so? So at 53% overall, but in recent 14 days, is beginning to wane bearish. The technical direction is somewhat almost flatline right now, and the commercial traders are heading more for the dollar than any other thing. And my stance when it comes to retail is to short this market. So by retail stance, I should be shorting this market. So on the chart, I have a technical direction for bearish market, a quite bearish market. However, I'm looking for opportunities that align with the fundamentals. And what I see here is I don't really have a good opportunity. What I have is I have a daily supply zone right here. I do not have any demand zones all the way to the downside. I mean, I could zoom in and let you guys see it for yourself. You can see that there is no clear demand zones to the downside. However, yes, price may have pushed, struggled to go up. This is not a clear push, so there's no demand zone here. So it was not clear. It was a struggle to the upside. So what I personally want to see is if it can continue this struggle and break above this zone, that is the 0.792 levels. If it can break above this level, I will be looking for a retest to continue this market to the upside. But right now, it doesn't look tradable to me for major reasons. Like I have a supply zone sitting right here. I have another supply zone sitting right here. Heavily, they are both seated and waiting for the market in a very funny direction. And another thing you need to pay attention to is if you should look at the overall trend of this market over like years, it has always been in a downslide, right? It has been in a downslide, but recently it has found itself, bouncing within a very huge range of 1 to 0.7 price, right? It's found its way between that price, and now it is also recently in a downtrend. So there's every tendency that the downtrend is going to continue. Like it's too obvious unless we start to see price break above the 0.80 levels and starts to head to the upside going forward. But that would take months. Mind you, this is a monthly time frame. Again, it will take months for that thing to happen. So we're trading the lower time frame here. Personally, I would, price is currently close to that decisive mark, right? Close to that decisive mark. What it really needs to do is to break through those levels right here. All those levels right here, as you can see. If price can find its way through these levels right here, the 0.81 and 0.78 levels, and go above it, then we have a stance that this market is going to be long-term bullish. But on long-term right now, the US dollar against the Swiss franc is a bearish market, even though the fundamentals are kind of telling me to go bullish, right? It's kind of telling me to go bullish. So I personally don't want to trade anything here yet. I want the technical analysis to align by going through these zones before I can buy to the upside, or the technical finally aligns with the fundamental finally aligns with the market going towards the downside. Next on my list is the New Zealand dollar against the US dollar. We have the New Zealand dollar currently standing at 55%, right? With very little variance. Starting from the fundamental data, the yield says more towards the dollar side. The economic data releases basically neutral at the 50% mark, 7% mark. That's quite neutral in my opinion. The daily technical direction is somewhat neutral. At 60%, 40% to me is neutral directions, right? The non-commercial traders are short on this market. Now you can see how the non-commercial traders and the yield are very, very similar for this market. So personally, in my opinion, even though it is slightly bullish, I personally see more selling opportunities in this market for me. However, I would love to trade against the retail traders by going long, because obviously what I see here is there is a level price is running towards before it's going to fall in line for this short move. So let's see if that is actually true on the chart. So over here we have the daily stance of the market, and as you can see, price has found its way pushed to the downside. Looks like it's finally pushing its way to the upside, and it's now within. This is something I don't like to always say, but if you look at this entire range, price is now within. Price has gone into the discount zone, the premium zone, and has pushed below the premium into the discount area. And now price is struggling in this premium discount area. It's a good place to buy a little bit for a little bit move to the upside. Now I'm buying, trying to short squeeze or that long squeeze retail traders. I may also lose this trade. Everything is liable, right? You could lose, you could win. It's a trade, right? I may lose this trade and price continues to push to the downside. But personally, why am I going with this kind of trade? Well, it's very simple. I'm going to show you one thing. So if you look here on the daily very well, we do have a clear supply zone right here. This is the clearest daily supply zone right here. And like I said, I am looking more into following the non-commercial traders and yield alongside. And overall data is neutral, meaning I should lean more into what the non-commercial traders are doing. And from what the non-commercial traders are doing, if they are shorting this market, they've already done their first round of short here, and price has found demand, a little bit of demand anyway. I am trading price to come back into these zones for me to then sell to the downside even harder, which is what's, if the non-commercial traders keep selling this market, that is most likely what's going to happen. So you can see I do have a buy trade here, and I'm hoping for this exactly what I just said to play out. Price push a little bit to the upside into this daily supply zone, and then the non-commercial traders come in and finally put like their sell orders to place, and will look to sell towards the downside, which is then going towards the lower daily demand zone that is sitting right here. Moving on, we have the euro against the US dollar. This is one of the biggest market, and I'm looking at the data, and I personally see more reasons to short this market than there is to go long. Why? You can see how everything here is going towards the orange red direction. We have, even though the sum product is quite neutral, the variance is very small, and if the variance is small, looking at the data, it means they are all almost one-sided. The yield is more into the dollar edge. The high impact data is more to the dollar edge. The recent 14 days of data release is also more into the dollar edge. The technical direction is quite neutral, which is around 60%. The non-commercial traders are more into the dollar edge, and the retail traders are more into the dollar edge. And this is my opposition stance, is to go a little bit long against them. If you look into the chart, what we have here is something similar to what the New Zealand dollar is doing. We have a very good supply zone seated right at the top right here. This is a supply zone to short this market from, if the market finds its way back here by mistake for any reason. And why am I even really looking for at this level even more? You can see price cutting below levels like the 1.65 levels very hard, breaking to the downside. This is a break of structure to the downside right here, as you can see. And with this kind of break of structure, price is heading for a daily demand zone right here, majorly heading towards a daily demand zone. When it finds its way into it, right, it comes back for this one, and then the shorts will suddenly begin. It's going to be very rapid. So personally, what I'm looking here is, like I said, I'm waiting for the market to find its way into the zone and then push up to the sell side for us to continue to the to the downside of the market. Now, long term, this market looks bearish to me, right? Long term, it looks bearish to me, but there seems to be like a good buying chance here because of this BOS, right? This break of structure on the daily. That is why I see more opportunities to price coming down, then going back up before it finally capitulates to the downside even hard. Moving on, we have the British pound against the US dollar. Now, this is also very similar. As you all know, the Euro US dollar and GBP US dollar are very correlating pairs. They are they move somewhat in sync, just that one tends to move like a little bit wilder than the other. Most times the British pound does this. It moves a little bit more wilder than the euro. The euro mostly is more like the contained brother, the one who is quite careful when it moves. And with that knowledge in mind, taking a look at it, you can see how it has much more reds than the euro, and the retail traders are seriously shorting this market also, right? They're seriously short on this market. Now, if we're going to have a short squeeze in this market, I think it's already happened. You can see first and foremost, we've broken structure to the downside all the way from here. This is a very clear break of structure to the downside, as you can see. But however, price has found its way down to the daily demand zone, very close to the daily demand zones for the British pound. This is the British pound now, as close as possible to the daily demand zone, and already finding its way back into, or going back towards, the daily supply zone we have here. So for me personally, I'm looking to short this market. If price should find its way into this zone first, I'm looking to short this market. It's already doing the long thingy on its own by itself, right? It's already doing it to the upside, and I'm looking for probably, if price continues to pull up to the upside, the 4 hours, I will be looking out for zones like this 1.35 to 1.34 zones. I would also be looking out for areas like the 1.36 and 1.364 levels. So if price finds its way towards this side, and I start to see that capitulation, I would sell. If it doesn't do that and it comes up to this level before it starts to give me that zone, that view, I would also look to short even better to more down movement. Last but not least, we have the Australian dollar against the US dollar. Now, this market has a very high variance. However, the details here is majorly confusing. You can see that the economic data has been weak for this market. It's quite weak. Not really weak, but more like leaning towards the dollar than it is for the Australian dollar. So there's more strength in the dollar here than there is in the Australian dollar. Even though the technical direction has been printing bullish, I think technical direction is heading towards a very good supply zone if it is going bullish, right? And the non-commercial traders leaning more into the dollar than the Australian dollar. Let's see what that looks like on the chart. So on the chart, what we have here is the daily direction says it's quite bullish, right? However, we've had very strong supply zone right up here on the daily, and I only have one thing I'm waiting for. You can see how far down the demand zone is. You can see how far down it is. Also, we also have this is good enough for me to call a demand zone, because there's a big gap between the close of price on this week and the open of price on the next week. So this is also another possible demand zone for me. Price may have done something here during the weekend. Now, personally, I would love to see price return towards this upside first, so I can short this market to the downside personally, right? However, it depends on what the news releases of next week is going to be like. So this is what I expect the market to do across the majors this coming week. And I hope you did learn something new from this video, or rather at least you learned the way to analyze the market using supply and demand, as well as fundamentals from the perspective of a calculative approach. If you do find this video interesting and you enjoyed the analysis, do well to hit the thumbs up, like this video, and subscribe to the channel, and do well to share this video with someone who you think may find this value or this knowledge valuable to their trading career and journey. Without further ado, I'd like to tell you thank you for coming. See you all in another one. Peace.